Hey, welcome back traders. So today I was planning on doing a back testing live stream, but apparently on YouTube in order to go live you need their permission like 24 hours ahead of time. I was not aware of this, so I think I'm going to have to postpone that live stream for next weekend. But instead, let's go ahead and take a look at gold, and I'm going to give you my higher time frame analysis. And since gold is pretty much correlated with the US dollar, I figure why not? Let's go ahead and take a look at DXY as well. So this is the monthly chart for the dollar index, and as you can see over the past few months we've went back into this rather large SIBI, and then we are moving away from it now. So this candle here is March's candle, so it's not done forming yet, but so far you can see that we are moving away from the SIBI. We've filled it in completely and now we're leaving it, so this is a balanced inefficiency. And now I think it's important to keep your eye on this monthly BISI right here. Obviously we're probably going to go for the sell side liquidity below these lows, but I think this BISI right here could provide a little bit of a speed bump. I think initially we're going to get some support coming back up, probably back into this previous fair value gap, but I think later on we're going to be trading through it and going for that sell side liquidity. Now taking a look at the weekly chart, you can see that we have this BISI right here, which acted as inversion as price traded through it, came back up, used it as resistance now, and then last week we had a pretty big drop. So what I'm thinking is that this monthly BISI may get treated the same way. I think once we trade down into it, we may provide some initial support, creating a retracement or a bounce, if you will, and then I think we're going to be trading through it and then using it as resistance, going for the monthly sell side liquidity. Now I'm not saying all of this is going to happen in 1 week. Remember, this is a monthly BISI, so it's going to move rather slow. I think maybe each one of these moves may be about 1 month or 1.5 months in length, so I'm talking about maybe 6, 7, 8 months here. Now what's going to invalidate this idea if we start trading above this up candle right here, but I think the most important thing is to keep your eye on this monthly BISI. So how is this going to be related to gold? Well, the dollar index and gold are inversely related. So if my overall outlook on the dollar index is bearish, that means for gold we will want to look for bearishness in order for them to be inversely correlated. Here's the monthly chart for gold, and as you can see over the past year, over a year or so, we've been having a really nice bullish market in gold, with only these two candles being a down candle in the past, year or so. Okay, so I want to go ahead and zoom in. The bull market for gold may not necessarily be done, but just like how I'm expecting a retracement for the dollar index, I'm also expecting a retracement for gold. So I definitely want to keep your eye on this monthly BISI. I think that's a pretty good target for gold to come back and retrace back into. Remember, there's also these down candles, so there's going to be an order block here as well. Now, if we do start going below these down candles, we do have a monthly change in the state delivery. I don't want to see this hit if we're going to continue the bullish market. I'm going to even take off this sell side. We'll leave that on later if we do get a change in the state delivery. But right now, I just want to keep my eye on this monthly BISI. I think we could see some retracement here and then get a continuation move to the upside. Now, you may think, okay, well, what about this fair value gap? Well, technically, it's not done forming. I have it here, but this is March's candle. It's not done forming. So this fair value gap may not be here by the end of the month. So I'm just going to go ahead and get rid of it. And yeah, you just want to keep your eye on this monthly BISI. Okay, so skipping the weekly and going straight into the daily chart, we have that monthly BISI that I mentioned, but I want to get a little bit closer to the most recent price action. And you can see that we had this SIBI here on the daily, and we traded through that, and I want to see it used as inversion. We kind of got a little bit of that right here, but I still think we can go and dip into it one more time. Now, I want to see this inversion fair value gap hold as support. I don't want to see it trade through. If you look over here, we do have a few daily candles here that is relatively smooth, so we do have buy side here. Now, if we are going to be expecting a deeper retracement, like with the dollar index having a rally, if we're going to have a deeper retracement, then I want to see price come down below this SIBI, use it as a reclaimed fair value gap, then come down to take the sell side of the credit below here. And as how far of the retracement I can expect, I'm going to expect price to come back to the monthly BIST. I only want to see price stay in the upper half of this monthly BIST, and then if it does that and we start leaving it, we start displacing away from it, then I would expect a new all-time high is going to be coming back in. So that's my analysis for gold on a higher time frame. I think the inverse correlation between gold and US dollar are more in sync than DXY with the indices. So if you are a gold trader, I definitely recommend you do your analysis on the dollar index as well. Right now, I think gold is a little tricky to trade, but I've given you my opinion, but you should make sure you form your own as well. And until I see you next time, safe trading.